and that sweet sound of honeymoon. Nothing like it. Bitcoin trading right now at 101, $850. And here we are. We got a strong session ahead of us. We're going to be taking a look at first Bitcoin and then through cryptocurrency, including Ethereum, and then also a really good look at global liquidity and the equity markets, as well as all risk assets, Bitcoin included. Right now, Bitcoin here trading above $101,000, well within the channel that we've currently been within. If we look at and we were to speculate what potential some upside targets may be. Now, a lot of people definitely were worried about that candle that closed on in December, that monthly candle. Since then, we've made some pretty strong repairs. Contrary, Daniel, to popular belief, we were a lot like it's vacation time, it's time to be with the family. Christmas, many people celebrating Christmas, New Year's, Reyes. If you've had the opportunity to follow along during that time, we were doing, of course, our daily CTM sessions throughout. If you're not paying attention, it's probably time you should start paying attention. Really, 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 really close attention. We're not just here going live now as Bitcoin has made some repairs back above $101,000. Actually, the repair was made all the way over here at just below $95,000. Yep, we were ahead of it. We were spotting it. We were all over it. Since this is the stop loss over here, by the way, those that were following along, paying close attention, we're going to go ahead and just lift this up over here and go off of the swing low. We're going to give this a lot of room, actually. We're going to go off of this low over here, right around $97,000. That is the stop loss that we're just keep moving up over here. This is from a purely discretionary perspective. And you can see that we've come in or peaked this morning just below 103,000 into our structural line. I wonder, because it's been a long time since that line has been moved, but if you just go down to where we peak below here, you can see it's a perfect touch. That's what the market's paying attention to. Obviously, in this moment, that's what I'm moving the line to be in tune with the market. And that is just a small continuation from the way that we've been discretionary navigating Bitcoin, not waiting for the repair, being the first to catch the early repair and being on the right side of that. Aldo, if you know, you know, and now you know. Let's take a look at what's going on over here within this channel and take a look at some potential upside targets. First of all, a couple of things that need to be said. Why we're trading within this current channel that we're in, and this is the channel that basically Bitcoin has been in ever since the breakout of the bull market. Remember, we were very early, and that was done publicly January 2022, posting the YouTube video, bull market breakout prediction, 17,250, as early as possible, being on the right side and then navigating it since. We're currently in this channel, and it's a very healthy and sustainable price action as long as we're within this channel. There are more than a couple of observations to be made and comparing them to previous cycles. So we're going to do that today. Now, if we break out up to the upside of this channel at any time, that would suggest that we are seeing some acceleration as over in this area over here. I personally don't expect any type of blow off nature right now in Bitcoin. However, that could change if you were to see nation state FOMO, where you actually saw strategic reserves being acquired by nation states. That could send some type of FOMO price behavior that could see and have a bid in it that could cause some type of blow off top behavior. But I don't think personally that we're anywhere close to seeing the top of this cycle. And I personally think, pure speculation, but we've been making sure that we take a look at this well in advance. One thing I want to point out over here as we look at previous cycles is the nature of the consolidation in this area. It has been the longest consolidation that we've seen. The previous longest was over here in December 2016 into 2017. and you could see that consolidation followed by a nice bull market. We didn't have any consolidation in this previous cycle. We saw a straight run up, and then we all know the story that that kind of seemed to be a little potentially subdued in what expectations were. Whether or not it was things like Chinese miners going offline, which that hash rate recovered right quickly. I don't think so. Whether or not it was things like people like FTX selling Bitcoin they don't have, subduing price. Likely, will there be some bad actors going forward? Likely. We're talking about that right now. Not at all. Let's stay in front of it. Let's keep going. Great morning, everyone. Let's take a look at what's going on. So I'm noticing over here, though, if you look at this past consolidation, it lasted about a period of 144 days. In relation to this consolidation, which lasted twice as long, 288 days. So you can see that elongated consolidation compared to this nice, healthy consolidation that led to a really beautiful bull run. We're going to be looking also at the dollar, a potential early warning sign of a breakdown, and then we'll tie that into why we're looking for when the dollar eventually does peak and what that would mean here for the extension of Bitcoin's run. We are right now focusing on the consolidation, and I want to point out to you that you haven't yet hit the thumbs up button. Now is a good time to do it. But I also notice in relation to this previous channel, here's this channel over here, and look at how long we've been consolidating this time for a much, much longer time. It's very, very healthy and sustainable price action. To me, it suggests that the duration of the cycle is going to be longer. And I want to reiterate one more time my own expectation, as we've seen something different. We've seen the all time high prior to the halving, not after the halving in every previous cycle. We're seeing the consolidation much longer than in previous cycle. And I believe that we're going to see the all time high on Bitcoin much closer to the 2028 halving than the 2024 halving. However, that does not mean for a second that we're going to get comfortable and we're not going to be watching what happens if there's anything that changes that opinion. We reserve the right to change our bias in a heartbeat if needed, as we have shown that we have the ability to do in previous cycles. And whether or not you are able to do that or not, that's on you and up to you. We put the work in each and every day. Each and every day, we hear it, we show up, and we invest our time in making sure that we continue to sharpen our skills. I'm wondering what the hive mind has in store for 2025. Now, this consolidation that we're looking at inside this channel is extremely healthy and sustainable. If we were to see seasonalities persist, if we look at the average of January, February, and March, you can see 3.5% in January, 15.66% in February, and on average, 13.42% in March. That would suggest that Bitcoin should be trading or has the potential to be trading at the end of the first quarter around $135,000. That would be if the average seasonalities were to once again be around it. Now, we know that's not going to happen. The odds of Bitcoin tagging January, February, March, its average of those months seasonalities, I mean, that's likely not going to happen, but will it rhyme once again? Will it be within that sweet spot? First quarter of the year, especially since 2020, has been highly favorable for Bitcoin. We'll see if that continues. We're going to look at that, what that looks like on Ethereum as well as it, and we're going to take a strong look at whether or not Ethereum is going to play catch up or not. Now, if Bitcoin were to tag the top of the channel, that suggests by the end of March that we could be looking at $160,000 Bitcoin. What could be a catalyst for something to happen like that? By the way, just because I'm throwing out there bull upside targets does not mean that nothing can change in between. By the way, the yield curve has just uninverted. We'll take a look at that in just a moment as well. just because we're looking at upside potential and targets does not mean that we cannot see price go ahead towards the bottom of the channel. And just so you're aware, and what the bottom of that channel would look like would be $80,000 in that neighborhood. Still well above the breakout that we saw after the election of Donald J. Trump, closer to $72,000. If we were to see a breakdown outside of this channel, nothing has changed ever since the start of this bull market. That would suggest that something is wrong and we would have to be adjusting. Now, I'm not going to wait for price to break below this channel for us to get on sides. We'll make sure we're well ahead. But right now, as Bitcoin is above $100,000, we're looking at some potential upside targets. And we're going to look at, even though the yield curve is uninverting, signaling potential recession ahead, slower growth, all those things potentially could come into the picture. 2025, we're going to be watching closely, but we also have reason to believe that risk is going to run strongly this year. So we'll look at that as well as we continue right now. That's some pretty good. Now, remember, we moved this down. This was up over here from afar, right? We called the exact play, but I am moving it down now, just so you remember for the next session that, like, I'm just adjusting to market and where it is right now. A lot of people worried about the outflows we saw on January the 2nd outside of Bitcoin, specifically outside of BlackRock's IBIT. $332 million worth of Bitcoin sold. Next day, you saw an extremely healthy number, almost $1 billion, $908 million of inflows, 253 back into BlackRock's IBIT. We'll be looking today to see, probably the price action suggests that it's going to be a very, very, very positive inflow day. No other asset that we're looking at right now. We have our eyes on number one, on gold. That's the milestone we're looking to overtake. For Bitcoin to overtake the market cap of the largest asset in the world, gold, right now, close to $18 trillion market cap. Bitcoin is well on. There's some people that believe it's headed there. This is President Trump's son just a couple of weeks ago talking about Bitcoin is going to 1 million.
I can tell you, a lot of eyes were opened when Bitcoin hit 100,000. And I can tell you a hell of a lot more eyes are going to be opened when Bitcoin hits 1 million. And I'm confident it's going to hit 1 million. I think we're all confident in this room that it's going to hit 1 million.
We got an administration. Now, when it hits 1 million, that's a different story, right? Like if you were to ask me what someone today on Twitter is like, didn't you say this cycle Bitcoin's going to hit $1 million? I've never said anything remotely like that. I don't. Sometimes I wonder on the public side how people could get so confused. But to be honest, I've listened to many of a podcast and I've thought I've heard things, and then I go back and I listen to it again. And many times, this is part of the more experience you have, the more you come to know yourself. I have definitely misunderstood what I thought I had understood. So therefore, I have a lot of compassion for those that do believe they heard something they didn't hear as well. If you were to ask me the earliest, most probable time that Bitcoin is looking to tag $1 million, I would say to you, look, we're looking out into 2031. That would be the most probable. It's not the most likely, but the most probable. Do I think that Bitcoin is usually, for the most part, since 2017, spending most of the time above this line? It is, and I do. And if you were to look at this yellow line, the resistance that we're currently hugging right now, and you were to use that as a guide of when Bitcoin potentially is tagging out to $1 million, you would be looking at somewhere around 2029. Do I think those are good and realistic? I do. I think those are good, like, measuring sticks of expectations of when Bitcoin. By the way, if we looked at this in relation to Bitcoin's power law and our low end estimates, gave me a lot of respect for the power law. Our low end estimates for the year 2030 were the exact same as the power laws, except that again, we've looked at what assets do that are undergoing S curve adoption, and they tend to, this is going to surprise you, they tend to, let me show you right now so that you understand what I'm talking about and why. Let me move over to Amazon. Check this out. You're going to like this. Here's a look at Amazon right now. And you could see the hype phase, the facing reality phase, and then entering the ultimate market opportunity. And you could see the changing nature, right? This is my expectations of what happens right here, right now on Bitcoin as it has entered the early majority. But what's going to surprise you is that, check this out. Just like, I mean, maybe I got to refresh this. Just like Bitcoin has structure, Amazon also has structure. And that structure has been in place even since the hype phase, just like on Bitcoin. But what's surprising as that you continue into the ultimate market opportunity, you come back towards the top trenches of the structure. Imagine Bitcoin were to do something like that into the end of the decade. Imagine Bitcoin towards the end of the decade were to be hitting once again the top trenches in this area over here. What would that mean? If it was doing it in something like, but it's a high number. So we're looking at the earliest. I'm going to come off the low trends right over here, the third lowest over here, and the earliest that, or this is an aggressive prediction of when the earliest Bitcoin would hit $1 million. It's very aggressive, very early. And you're talking about, yes, the summer of 2027. That would be this cycle. Now, I just want everyone to be clear. We talked about when the most probable time Bitcoin would hit 1 million, 2031. Would not surprise us if it happened in 2029. And the earliest, most aggressive area we could give would be sometime around the summer of 2027. That does not mean that I expect Bitcoin is going to hit $1 million this cycle. What it means, if that were to happen, I would not be that surprised. And we just looked at why it is right now. Currently, Bitcoin, though, continues here doing Bitcoin things, looking very good. And the markets look very good. Just jumping over. By the way, if you think that you are bullish on Bitcoin, to understand that you're not nearly bullish enough, I highly recommend this podcast on Tales from the Crypt, TFTC, episode 570. Bitcoin's path is more bullish than ever with Nick Bhatti. Excuse the pronunciation if I got it wrong. Very informative pod onto how convertible debt and repo markets work. This is something that I valued a lot. And if you have the time, I highly recommend that you watch as well. Bitcoin bull market run currently holding strong over here, 57% open profit. If you think that you're going to be able to trade in a bull market and outperform buy and hold, you're wrong. It's just, you can't do it. If you're able to know when the low of the bear market is and the very high of the bull market, then nothing outperforms buy and hold. If you don't know that, and you're trading, for example, 8-hour BTC 107, you're going to obliterate buy and hold returns over a long enough time frame. But if you are able to know when the bottom of the actual bull market begins and when the top is, you cannot trade it unless you were using Bitcoin bull runs. Bitcoin bull runs will not only be, look at this right now, you're looking at 442% open profit. We have 57% open profit. And during that time over there, well, you're going to have to trust me because I'm not going to go ahead and do that right. We have about 160% of realized profit and then holding that 57% open profit. And when that compounds over there, you could see the one difference is that no one is going to know when the top is. And by the time they exit the market, whenever that will be, they will have given back significant profits while we will exit the top in relation to Bitcoin bull runs. We are looking here at all of our trading templates over here, and you could see BTC 107 holding an open position, 4% into profit right now. BTC 108 took that same trade. Buy side only, also in the market, and with the better entry, this is our best buy side template for trading, holding open position 5% into profit. And then even this time late on the chart, CTM 2.0, the original, holding an open trade here, 3.6% into profit. Ethereum has also entered the market on the long side. So we have Bitcoin and Ethereum, super healthy when Bitcoin and Ethereum here are leading, has entered the market as well. Let's take a peek at what's going on here with Ethereum as we are watching and waiting as Ethereum works towards its all-time high. We are tracking the move to 4,800. We have finally, ever since the Trump administration won the election, Gary Gensler resigning, we have seen for the first time inflows into, look at this, the launch of the ETFs. It was going nowhere. And then right over here at the time of the election, since then, we're finally seeing inflows into Ethereum. Now, these inflows are obviously a lot smaller than the inflows that we're seeing into Bitcoin, but right now, so is the market cap. And it's a very, very positive sign over here. Whether or not Ethereum is going to be able to catch Bitcoin, that's all very, very subjective. This first 3 months of the month from inception, now this was obviously global lockdowns occurring over here. This was hype phase behavior, is very bullish for Ethereum. It looks like there's a strong possibility into the first quarter that Ethereum is going to break out to new all-time highs. That is currently what we're waiting for and watching, holding long here right now. I want to do a session on AI and AI agents for you this week. There's a lot of talk right now over the weekend, a lot of people focusing in on what potentially could be one of the best performing sectors in the altcoin market. Cardano here on CTM 2.0 back in the market. And we're still waiting on over here a couple of filters for Cardano to re-enter on CTMX 103B. Solana remains out of the market as well with Cardano, CTM 2.0 aside. And what we're waiting on over here is, again, a couple of filters in order to be able to participate on the upside. So right now we're looking at Bitcoin and Ethereum, both in the market, leading the way over here. And it is absolutely a beautiful thing to watch. Oof. So this is a great question. And what should someone who was bullish on Bitcoin then move to alts for higher returns do? I feel like I'm sidelined looking for higher returns on alts. I mean, one of the risks here, and I think it's a great risk, would be if indeed you were to see something occur, like an actual announcement of the bill passed for the U.S. to take a strategic Bitcoin reserve position. And if you go ahead and you watch that podcast I just highlighted, you'll see why that it doesn't even matter. Like, that's not part of the bullish case for Bitcoin right now. If that were to happen, the likely scenario would be that you would see a lot of different nations following suit very quickly in order to front run the actual beginning of those purchases, as well as not to get left behind. If that were to happen, I think that Bitcoin has the potential here, potentially even to enter its next phase of the bull market. By the way, the next phase of the bull market would be, go ahead and just follow me over here, and then it's going to come down and look at this channel over here and the similar situation that was occurring into that previous bull market. And then look when it breaks outside the channel to the upside. That's when you see that acceleration occurring. And again, like expectations or resistance into the first quarter is up over here. It doesn't mean that that's where we're headed. We could head to the bottom, but if we were to go to the top, that is resistance, and we would be looking for price to stay within that channel until it's broken. If it breaks out to the upside, likely is going to be a retest, and at that retest, price could fall back into the channel. That could spell some type of cooling for a period of time or a successful resumption. That's going to signal much higher price potential on Bitcoin if any that's happening at any time. And I'm not saying it has to happen in the first quarter. I'm not even looking for it to happen in the first quarter. I'm just talking about first quarter seasonalities project that likely we're looking at somewhere around 135,000 Bitcoin. That would be absolutely normal for what's taking place right now. Now, it could be higher, it could be lower. We sincerely don't know, which is why none of our investment or trading thesis revolves around trying to predict price. We'd like to have an idea of where we are in cycle. And that's tricky right now, too. We're going to look at that as we look at traditional markets right now. Hello. Thank you. I wanted to pull up that picture this weekend out in Miami. Eric Trump and Saylor were together taking some photo opportunities. And yeah, there's no question the current administration has definitely aligned itself with Bitcoin and they want to make it known. Look, we have MicroStrategy, one of the largest holders of Bitcoin. We have multiple spot ETFs that, Fidelity, and BlackRock alone, one of the biggest holders of Bitcoin. The United States is already leading the way. And this current administration is looking to just go ahead and solidify and make it known to the world that this country is pro Bitcoin, pro crypto as well, and specifically pro crypto for those projects that are willing and want to work within the United States. A breakout above that would signal that the trajectory has changed, and you could see the acceleration. Look at the angles over here together, and you could see that, why the angle over here is roughly 33%. And you can see why the angle over here is roughly 33%. You could see as price broke above, the trajectory changed and you had a much steeper angle over here. This is rough sketches over here, 72% I'm showing. Has that already happened? Has if you look at this price action over here after the election, does that signify that we've entered into the sharper angle? I don't think so. And maybe, but it reminds me of what happened over in February, March with well within this current channel that we're in. It doesn't seem anything out of the ordinary or spectacular. And actually, if you believe that happened, you were wrong. Here's 72%. And you can see that even if you use a smaller angle like 68 or 67%, we've pierced below it. So I don't think that. I don't buy that for a second, but it's not confirmed anyway until we were to break outside of the channel. And then if we were to get a resumption up, on the resumption up, then that's the potential and possibility for a steeper angle to be in play. Right now would be pure speculation if you think that's happening and there's no type of technical confirmation or even affirmation that that is happening. So I don't really particularly see that, nor do I want it. The longer that we stay within this channel, the better. It's more sustainable and the carry could be much greater. So very, very happy to see where we are right now. The podcast over here, let me put it into the description, is found right over here. Fantastic, fantastic, fantastic podcast. Now, the beginning of the podcast, and it's worth listening to, is all a lead-in until, let's say, the second half. And in the second half, as you're listening, you are going to be learning stuff that you you don't know anything about. It is well relayed, and the education is well worth your time. And you're going to be like, wow, I am not bullish enough on Bitcoin. That is the way that I see it. And we'll see what happens. So back to the conversation. If you the risk is that something like that were to happen, it's the probability of that happening, I suppose, is somewhere around, I don't know, 30%. I don't know that it's that great, but it's not that low. And if that were to happen, I think Bitcoin is going to outperform alts pretty strongly. However, the good side about that is that should send off a mega alt season is altcoins outperforming Bitcoin for a short period of time. It should set up a very prolonged and strong bull market in altcoins versus the dollar and fiat, if that were happening. And that's all good. But look, from afar, we don't know what's going to happen at any point in time. We have something called buy side boost, where if you had an account and that account, let's say it was, $100,000, where you break up your allocation between Bitcoin, 25,000, between Ethereum, 25,000, between Cardano and 25,000 and Solana 25,000. However, if you get an entry signal, if you're out of the market in all of these and Bitcoin enters the market, so that you don't have capital sitting on the sidelines doing nothing, you take 100% allocation into that Bitcoin trade. 100% allocation. It happened right over here, actually, as Bitcoin made this run up over here. It took the position of Ethereum, the capital of Ethereum, the capital of Solana, and the capital of Cardano. Shortly thereafter, as Bitcoin was up 8%, Cardano entered the market. Cardano went on to this trade over here. I mean, no one knew this was coming as Cardano takes 138% out of the market, and you never know when it's coming. So rather than trying to deduce when you think Bitcoin or altcoins are going to outperform, this type of strategy is so superior and advanced that I highly recommend you check it out, what we're doing here together in CTM. This is going to help you be in the market, know when to be in the market, when out of the market, and be on the right side of the trade. We just don't do it on these four pairs inside Bitcoin and crypto. We also do this out on the stock market. And on the stock market right now, we're looking at, by the way, I want to get into this because this is really helpful for what we think is going to be happening next on crypto. We just had NVIDIA enter the market, currently holding a trade 1.8% into profit. We're looking at FNGU holding a trade 47% into profit. Tesla just took nice, healthy profit, putting it into all-time highs, and TQQQ is out of the market. The profits that we see on stocks here on the daily time frame, TQQQ is the least performer since 2020 with a 15% drawdown, up a mere 838%. That is like 170, 180% a year, which outperforms the best of the best by a strong. It's our worst performer, though. Here's NVIDIA's performance. Look at the return. Look at the drawdown. Here's FNGU's performance. Look at the drawdown. Look at the performance, the net profit. And then look at here at Tesla after closing that last position, just catapulted ahead after it closed that nice 46% the profit capture. So like between and you don't need to be everywhere. You don't like getting it done. We focus primarily, this is our foundational strategies on these 8 different assets. More than enough to get it done. And when I talk about getting it done, right, we're talking about outperforming the best of the best. Let's take a look at what's going on here with the NASDAQ. CBK. Isn't that beautiful? Hyping over. Absolute beautiful. Like that's so far the podcast of the year. And I'm talking about 2024. It was beautiful. NASDAQ here up on the session, trading right now at $21,782,000. We were able to do some couple of beautiful things over here as I look back in our history. I'm reminding that video that I put out in March and was talking about what would happen if this support broke over here. Sure enough, when it broke, price then went much lower. We were able to, this is how Aldo joined us in this. He saw a tweet over here in this area where we were talking about if this breaks, if this trend line breaks, even though everyone was so bearish on stocks, on equities and Bitcoin, called the bull market breakout prediction on Bitcoin. Why against sentiment? This is where we said we would waterfall up. We're currently watching from when this bull market would end, would be a break of this trend line that you could see coming off of the low, the one touch, the two touch. It's so simple. Yes, you could draw lines on charts and manage risk around it. Yes, you could go and compete in a highly calculated and advanced manner, as I just showed you on stocks. Yet very few could do, but like, or you could just draw lines on a chart. It's up to you, right? They both work. People out there telling you that you can't draw lines on a chart and manage risk around it have no idea what they're doing. Strong words, very true. But that's late. you can see over here that from where price is right now, or from the all-time high into that line, that's like a 12% drawdown. For us, that's very late. We're always looking to see the earliest opportunity for any technical breakdown to occur. Now, there's nothing late about it. If you were to see that breakdown and then you were to see a really strong bear market inside of a recession occur, there's not like, remember, when we talk about it's never too late to de-risk, this would be one technical breakdown where it would not be too late. However, we want to be as early as possible all the time. So we watch for this is again, this is an inverted chart of the NASDAQ. And I took a Wyckoff distribution chart to look for accumulation at the bottom. This was something again that we were able to see. And so I'm watching in real time just to see if and when we ever need to or see any type of event that we're not looking for. When I say not looking for it, you have to have your eyes today on the yield curve on inverting, right? And right here we have it. And historically, this does signal the countdown towards a recession. So we can't just like have a bias and then like stick to that bias with like horse blinders. We have to be looking and always pushing against our own bias to make sure that we're not left off guard at any point in time. Right now, over here, as far as any distribution, I mean, we had a breakdown outside of this wedge. I'm highlighting the support of it. Breakdown. You can see that this support highlighted is held, and we're back into the triangle. So it's been neutralized. Right now, here, obviously, markets just off all-time highs look very, very healthy. I think that we've had now 1, 2 touches of this area of support, something for us to keep an eye on as long as we're above it. Very healthy right now. Nothing else to say and or add about that. When I talked about bias going forward, right, I just want to point out a couple of things to you. So let me jump ahead. And you could see that after a year where you've had a 20% gain, by the way, S&P 500 was up over 20% in 2024. Also in 2023, you could see that after after the average year after 20% gain is the average year on the S&P 500 is 9.5%. After a 20% gain, the average year is 10.6%. But after back-to-back 20% gains, the average gain is 20% the year after. You could see why I lean bullish over here. You could check it out over here, and you could see in 1954 and 1955, we had back-to-back years of over 20%. And then you see 1950. I'm so glad I found this out. So this is completely wrong. Do you remember we did a session and we looked at years after? By the way, don't trust anything and verify everything. And that's what I'm always genuinely looking to do. You see this tweet and you may be like, "Oh, that's correct." And then I was saying, I remember we looked at year by year the 3 other times the S&P 500 had 20% gains back to back, and then we looked at the 2 years after. And at the end of it, the day, we were not able to deduce any type of edge of what it would lead to in the next year or two. So here you can see that breaks down. You can see after back-to-back years, 1954, 1955, you saw only a 2.6% gain. Now the average, I'm sorry, this is correct. The average is 20%, but it doesn't, that's just the average. So take a look with me. Doesn't mean that it's going to, here's one instance where it was lower. 1995, you had the next year another 20% gain over here, and then the following year was a 31% gain. Now you have 1996, so you have 1997 and 1998, another 2 years back to back. The following year was 26%. So now you have another 2 years, dot-com bubble, 31, 26, and the next year was 19.5%. So now again, we have back-to-back years. Let's see what 2025 brings. We only have this one period of the dot-com bubble really kind of eschewing the data. go back to 1954 and 55, the only other time it happened. And it was just an anomaly. So it doesn't really give us any idea or any, like, you can't develop a strategy around that. Expectations are that when a bull market has lasted this long, the bull continues. There's plenty of reasons to look for the bull continuing, and then there's reasons to be cautious that wait, maybe we should be a little bit cautious going forward. A lot of people, I think we could put to rest. You know how narratives change all the time inside Bitcoin crypto markets. One of those narratives was that you're going to see risk following global liquidity. Here in blue, you are looking at the S&P 500. In white, you're looking at global central bank liquidity, and you're seeing a massive divergence between the two. We have many models that we've looked at. This one is actually the same, the one in white, as our model. And you can see in relation to Bitcoin that not since here the divergence is taking place. The divergence really began really strongly in March 2023. What happened in March 2023? I remember the banking crisis, but that just saw the Fed's balance sheet raise momentarily, and then it's been going down ever since. So we're seeing since the first quarter of 2023 a massive divergence between liquidity and between risk assets. What's happening, what's going on? I notice over here the last time, let me just jump down into this period over here. The last time QT was running, the last time there was a major divergence between liquidity, central bank liquidity. So you could see from June 2019 and then down to here, liquidity is going down, and Bitcoin bottomed well ahead and was going up. This is when the Fed began cutting rates last time, and this is when the balance sheet in September 2019 began to reverse. So look, I could say that we have seen other periods where we've seen a divergence between global liquidity and risk assets, Bitcoin, as well as equities, NASDAQ and S&P 500. It also did occur during a previous tightening cycle. So that's just observations. And from whatever model we look at, we could see that global liquidity is going down, risk has bottomed, continues to go up. Here's S&P 500 in orange versus global liquidity. And other people look at it a little bit different. This is cross-border capital. They're showing that, and they called out around this time, January 2023, that global liquidity had bottomed and is now rising. The way that they calculate global liquidity is, I mean, look, they keep it proprietary. It's hard to verify if you don't know. But in consulting and looking at this model, you can say, well, no, global liquidity is rising. And expectations are that it's going to rise and peak somewhere in 2025. So that might be a place that you see Bitcoin peak in that area. And I just throw out the caution. The caution is this. Look, you saw global liquidity rising in 2000. You can't see it here well on this chart over here. You could see global liquidity was on the up because you could see it up over here where they stop in the middle of 2020. This is where the dot-com bubble bursted. This is much clearer. During the great financial crisis, global liquidity was rising and the markets crashed spectacularly, right? So I would say and offer one thing and say, well, you could consult global liquidity expectations going forward, but there have been previous instances where we've seen global liquidity rising and markets crashing, two other in the last 25 years. And we could also say that it is also potentially possible, specifically on Bitcoin, if the rate of adoption were to continue to accelerate, that you could see global liquidity, not as projected, actually going down, and you could see Bitcoin rising. And again, this is done differently. This model showing liquidities going up. All other models that I know of and everyone else sees and knows of shows it going down. So something to consider and consult. And then you have over here, I guess the one thing that I wanted to introduce into this episode right here, right now, that I don't have pulled up would be looking at M2. And you could say, well, M2 is rising. That's why risk assets are rising. We're going to just pause. I'm going to pause there, have it pulled up in advance for tomorrow. And we'll look at this in relation to M2, which, by the way, is a horrific indicator of when you're seeing risk assets peak. Bitcoin in the previous cycles has been in drawdown 40 and 60% before M2 peaked in the past. We use M1, monetary supply total, not M2, but we'll go ahead and we'll check it out. The dollar, that's a good lead in right now to the dollar and what's going on. Let's take a look at what's going on. By the way, this is chicken scratch. This was discretionary. This is NVIDIA. This is sell impulse confirmed. This was buy impulse confirmed. Right now, you can see that was navigated very, very well. Just checking in on the 10-year, coming in and fighting into this resistance. Not getting into now, but I want to get into the dollar. I want to get into the dollar. And look at that this morning. This is our very aggressive trend line break, sell impulse line over here. And then this angle is not correct on the green line. I simply just copied and dragged this green line over here. Just saying, even if this is from myself saying, if we break down over here, that's the earliest opportunity we're going to see some type of potential breakdown. However, I'm guarded about where it ultimately would break down and be watching for any type of resumption upwards if that were to happen. However, I like this over here from Mr. Spread, and he's just pointing out the rising wedge that's occurring right now out on Bitcoin, and then showing, let's take a look at it. So you have the top over here, then you have 1, 2, 3 touches. So you can say the top over here, 1, 2, 3 touches. I'm trying to make the case for it. I guess it'd be anyway. Point taken is that at any point in time, we could have a technical breakdown. We're watching for it. At this point in time, for me to call a technical breakdown, it's not going to be that impulse we were just looking at. All right. So let me just draw it like this right now. Here's another way to look at it. By the way, the reason I'm watching this so carefully and it's so important is because if you go back and you look at this, the dollar rising so sharply, right? Bear market on Bitcoin. And then the dollar starts consolidating. It even makes new all-time highs, but it's consolidating. And why it's doing that, Bitcoin has this rounding bottom. Look at this. Dollar rise sharply, bear market in Bitcoin. Then the dollar begins consolidating. Whether or not it makes the new all-time high or not remains to be seen. But Bitcoin putting in that rounding bottom. When the dollar breaks down, that's when Bitcoin really entered its last phase of the bull market. So I'm watching to see at any time the dollar breaks down, because that's going to signal to me that we're entering the last phase of the bull market. Right now, that's not happening. We see a strong dollar. We see a very strong dollar. We're watching for the earliest indications that we're seeing something change over here. And we're just trying in real time to be able to get it right. In my opinion, the dollar, here's this trend line, by the way. If I zoom out with you, that goes back until the birth of QE. I would not be surprised if the dollar during this current phase tags the top of this trend line. It could be somewhere around 120 on the DXY. I would not be surprised. Just because I would not be surprised about that just does not mean that that's my expectation. My expectation is, well, I'm just trying to stay on the right side. This was our buy impulse. This happened as the Fed cut rates. Most people were expecting the Fed to cut rates and the dollar to dump. That's not what our expectation were. We just follow the technicals and stay on the right side. Right now, I think to be safe, and this is not accurate, this green line, but that's the breakdown, that earliest breakdown that I could see that we would be looking for some type of breakdown. Michael, so to do this, I want you to go into, it's very complicated. Go into X search, X advanced search, put in Juan and then Trader's Mastery, and it's going to pull up a few different videos on YouTube that is explaining it and going over it. I mean, those were really long sessions. It's something very nuanced, but in the past, all I can say is when the yuan has begun correcting from its highest point, right? You saw markets in trouble, all risk markets, Bitcoin, S&P 500, NASDAQ. That's when they entered the bear market. That happened this time as well. And I pointed out that by the time that the yuan finishes devaluing, in the past, risk markets are trading at new all-time highs. Now, we're looking at risk trading at new all-time highs, and we're not looking at the yuan finish devaluing. So all of those things have thus far been proving correct. Now, when the yuan finishes devaluing and begins to appreciate, and is that likely because the dollar is, remember we just talked about the dollar peaking and then the dollar beginning as it begins its decline, that's when we really see the market move. It probably, when the dollar is peaking and then the yuan is done and the yuan begins appreciating, it's probably just looking at something in a different lens, but it does offer some type of confirmation of what it is we're looking at. Do I think that we need to look at the yuan and not just simply focus here on this chart? That No, I think this is easier and simpler. Do I think that they're all connected? I absolutely do. All right, everyone, this is our first session back since vacation. So, take a little bit to get into it. We'll be back at it tomorrow and we'll continue forward. Usually this second day, my flow is strong. Make sure you're here tomorrow to be with us as we go over the markets together. Right now, everyone, I wish you right now, for anyone in CTM Core, anyone who's been with us since 2020, we're going to do a work session inside. This one is really, really, really important. If you have, I'm actually going to record it and send it out to CTM Core. We're going to go ahead and try to get the hive mind involved in some advanced modeling. So if you're not able to make it right now live, I'll record it and I'll email it out to you. This is like almost a last attempt to find all of those nuggets within Core. Over the past year and a half, we've found so many hidden nuggets of talent inside CTM Core who have been able to step up right on time at the right time. This right here, right now, is the opportunity for anyone who's interested in getting, stepping up and getting involved more in modeling to go ahead, pay attention, and get involved. Everyone, have a beautiful day.